Good morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
We'll have a look at some of those numbers. First of all, not much happening on the domestic front, so we'll go straight to the interest rate market.
Yes.
The chart there is the US 2 and 10 year yields, or the interest rates over the last, well, that's roughly 18 years now. So they are getting close to their highs over a very long period of time.
Absolutely. Back to 2005 and 6 for the 2 and the 10 as far as where they are velocity-wise. You're looking at the 10-year broke 4.5% on Friday, and the 2-year broke 5%. So that really gives us something to worry about. And as Fed Chair Powell has said, and all the Fed presidents pretty much in sync, stronger for longer, and do we see another rate rise come November?
Yeah. So yeah, it's an interesting space. They could potentially have one more, but you would think that where those rates are now, as they filter through the broader economy, they're going to feel the pinch, the consumers, at some stage.
Definitely.
So have they done enough already? Time will tell, but it gives you an idea of, I guess, more so how low interest rates were for such a long period of time.
Absolutely, and how they're biting into everything as far as, housing and mortgages and you name it. So worry about oil prices and how that feeds into it.
Yeah, for sure. Over to the UK, quite a bit of data came out last week. The CPI came in only 0.1% lower than it was the previous month, so it's still quite sticky. But the BOE kept the interest rates on hold.
Yeah, they sure did, and I think that they might continue that over the next couple of months and leading up to Christmas. They're really under the pump, the POMs, as far as hurt on Main Street. So we've just got to see whether that number continues to slowly come down, or does it get another kick up? Again, we're running out to Christmas, 3 months to go.
Yeah, it's sort of uncomfortably high at that level compared to, say, the US, where it's around that sort of between 3 and 4, which is a lot more palatable.
Yes.
Also in the UK, GDP is not down, but it's pretty much flatlining, and the PMI is pretty much going in reverse, which pretty much summarises the state of the economy there.
Yeah, I mean, and once you're under that 50, that's really a contraction point, and that's where you don't want to be. And it seems to be in one-way traffic there, that gold line or yellow line. And, are we going to see a 45 like we saw in 2020? You start hitting it hard with high inflation and interest rates, and it's impacting the domestic economy. And PMIs really give you an indication moving forward. That's Purchasing Managers Index. What managers are purchasing? It's a simple tool. And if they're not purchasing a lot, that means they're not selling a lot.
That's right. Also, on the back of the no movement in the interest rates, the pound has come under pressure again as well.
Yeah, been a great currency to trade. That and the Swiss franc have been the standouts all year, the duo. And where you're looking 122, put your mind back to October last year. We're nearly a year from it, and we got to 103 or 1.03. Now you're at 1.22, and it's been an incredible push down. US dollars had a big rally to the upside, and that's all in that end of July window. Really, it peaked early August, and then boom, and sold off, and it's been one-way traffic again. Great market to trade.
Also on the currency side of things, US dollar index. Grinding higher.
Yeah, it is, and there's two things. The previous chart gives you an indication, as the US dollar went up, the pound came down, and that 106 sort of level, it's just under 106. It broke 106 earlier this morning, and then it's given back. It's about 105.95. Higher yields, which is interest rates, push the currency up. The risk could be starting to be off the table. A lot of anchors are starting to ask those sort of questions. Are we fully priced? Do we continue to see you've got earnings season just starting to trickle through in the US, and how that ratchets up to October, and what happens as far as equity markets? And the next part, of course, is do we take to a 107 with talk of a further rate rise? 107's on the table, I would think.
Yeah, so it's sort of it's interesting, but it's certainly, as you say, it makes sense. Higher yields in the US translate to a higher currency.
Currency, and and as you pointed out, the first slide, well, it's at 17 or 18 year highs. So it's unusual, and that could really push dollar far higher. It's not a good time to be traveling with any other currency than US dollar.
Oil, we've talked about for a few weeks now how the Saudis and the Russians are cutting supply until the end of the year. On the other hand, the US is ramping up to potentially offset that.
Yeah, absolutely. And we've just got to see whether the Saudis and the Russians roll that after December. They've said that it's those supply cuts or production cuts are going to roll out till December. Do they take it forward and make it January and February and possibly the first quarter? And how that's going to impact naturally, an economy like the US, they'll probably have to just even make or produce more.
Yeah.
They're nearly at those record levels, as you can see.
Yeah, looks like it. And once again, the oil price off slightly from last week, but still at reasonably high levels, and just as the chart shows, creeping high by the looks of it.
Yeah, I'm going to ADIPEC next week in Abu Dhabi, and that's the largest oil conference in the world and convention. So it'll be interesting. Many of the traders and hedge funds and everyone from downstream to upstream, every component of the energy complex will be there. 100,000 visitors, so it's a big event. And surprisingly, what I'm hearing now, guys are saying, January 110, 120 a barrel. So, that's where everyone seems to be stacking their long positions as far as hedge funds and traders. So, as they say, Andrew, don't get in the way of a bull market. I think you're looking at Brent running at around about that 93 at the moment, nearly 94. But, yeah, you're looking there. WTI, it's very, very interesting.
Yeah. It's sort of interesting, that chart where it's sort of, you're now getting higher highs there. So is that the catalyst to push it even higher? But if you go back over that 12-month period, it's definitely creeps up and then comes off quite a bit, then creeps up and comes back quite a bit again. Will that be the same case here? Maybe not, because of the constraint on supply.
Yeah, again, it's easy for us. I mean, we're 3 months till Christmas. You can't believe it. Where's the year gone? And it's a backward-looking metric. It's very hard to forecast how much further it can go to the upside. And, but when you look back in reflection at Christmas time, back to where we are today, you can say, oh, yeah, that trend continued and X is the number where we're at, or did it give up some of that hot steam? But it's very, very dynamic, the market. It's been incredibly volatile, and traders are loving it because of that one-way traffic that you've seen probably over the last 8 or 9 weeks.
Yeah, for sure. But keep an eye on it, and you'll keep an eye on it when you're overseas next week. So.
Yeah, it should be good. I'm looking forward to it. And we also, the next week after that, I'm in Fujairah for Gulf Intelligence. We're having a large, and you've got OPEC Secretary General there. So it's a big event. You've got the number of highnesses from the UAE. And it's a big port for Fujairah. It's looking at capacity, Andrew, of 100 million barrels of capacity. Now, that's an enormous, at $100 a barrel, that's $1 trillion worth of oil that you'll be storing there. So Fujairah is a big port, and I'll have a tour of that as well, and then a roundtable discussion.
Excellent. All right. Well, we can talk about that when you're overseas.
Well, I'll look forward to it. I'll be joining you each Tuesday from Abu Dhabi next week, and then Fujairah the week after.
Yeah, for sure. Look forward to it.
Thank you.
All right. Thanks again, Pete.
Good to see you, Andrew.
All right. And that's the XM.com weekly market update.